Hi everyone, welcome back to our new episodes of Phillip Futures Trading Podcast. My name is Yongxuan and will be the host for today. So with me today here, we have Hong Sing from our Phillip Futures dealer. Hi Hong Sing, how are you doing today?
Yeah, I'm doing good.
Okay, great. So for today's topic, we will be focusing on commodities. As all of you know that the commodities products prices are sitting in a roller coaster with all the things is currently happening around the world. And we have concerns over the global economics on the rapid inflation, supply chain disruptions, potential recession in the United States, and also the Russian invasion turning into a wider conflict. And how will all these factors affect the soybean price? And what are the things that you need to take note of while you are in the soybean market? So for today's podcast, the topic will be about, is the chaotic market affecting the soybean prices now? And what are the things you need to know? So for the first questions to Hong Sing, China locks down as the COVID-19 outbreak. Do you think that the soybean price will be affected as China is one of the largest importers of soybean?
Yeah, okay. Because of this question, I think I maybe need to present some of the data from my laptops. Yeah, can you help me to change it? Yeah. Okay. So as you mentioned on the questions that actually China are the biggest importer in the soybean markets. Okay. So in this data, it shows that within 2021 till 2022 periods, there are around about 162 million metric tons of soybeans were imported globally. And China was actually by far the leading importer of soybeans, with an annual import volume of approximately 97 million metric tons in that year, which is actually about 60% over the world imports. So from here, you may understand that China is actually very important for these soybean markets. So back to the questions regarding for the lockdown, that we understand that the lockdown they imposed in China is actually due to the dynamic zero COVID policies. And these policies are actually started from Jilin, Shenzhen of the northeastern. Yeah, so and then after that is come right after is the Langfang City and Dongguan in the south, which this situation of lockdown may actually soften its demands of soy-based feeds. So far until now, the situation is actually heavily depends on what China government's decisions, whether they are going to enlarge the lockdown coverage of the city or not. Hence, the markets of soybean will for sure put an eye on the result of lockdown and will be further actions and what will be the further actions taken by China governments from the outcome.
Okay, yeah, recently, I think other than Malaysia, China, they are currently imposing the lockdown as the COVID-19, the case is increasing. Right? I think not only in China, all around the world. Right? Okay, so for my second question will be, do you think that the prices will continue to be as volatile in the future as in what has happened recently?
Well, I think this is a good question since that the volatility of the markets becomes the concerns all over the traders or investor. Yeah, so for my own opinions in this situation, I would like to say yes for these questions. Recently, the events that actually caused the markets to become volatile is due to the large export country of grains, which is the Russia's invasions to the Ukraine, right? So before understanding like what are the things that providing from Ukraine's, actually in 2021, Ukraine exports more than 27 billion US dollars in agricultural products to the world. So Ukraine has actually 6 main, or we call it primarily products, with over $1 billion in export sales, which is actually the corn, sunflower seeds, wheat, rapeseed, barley, and also sunflower meal. Okay, so these have pictures that shows this is the crops calendars for Ukraine, which means that you can saw that the barley, corn, rapeseed, barley, corn, millet, rice, soybean, and sunflower, the plantations periods of it is actually during March until May. which means it's already affected during the war, and they are unable or even didn't proceed with the normal activities of plantations during this time. So that no matter the war stops in short times, or even like both entities are unable to come with a consensus so that the war continues for quite some times. Either of these situations will actually bring certain impacts to the soybean markets, and this for sure will keep the markets to maintain the volatile situations. And so that I have another interesting question that I will bring out within this war is that there are actually different ways to end up the war. And there are several of possibilities on the tops between Ukraine and Russia, they are going to promise in the deals. But the problem is, does all of the promise the deals are accepted by US or other Europe's country? How are they going to react toward the ending of war? If like the terms that accepted by Ukraine is not really likely what US and Europe wish, do they will stop the limitations towards the Ukraine towards the Russia? How fast were they going to stop it? Yeah, so the biggest problem is this might be some of the topics that can discuss further. Yeah.
Okay,
I think
great.
that's my answer.
Okay, so yeah, I think Ukraine and Russia, because Russia is one of the largest exporter for the commodities like soybean oil, and Russia is also the largest country in the world. So when all these things happen, they affect a lot of things, not only in the market economy, they also affecting all the commodities. Okay.
Yeah.
Yeah. So for my third question will be, Argentina is the largest soybean exporter. And with the recent export restrictions, what do you think will happen to other competitors' oil?
Okay, speaking of the Argentina, that we need to understand before like the export restrictions that announced by the Argentina, right? Argentina has actually went through a drought, become major negative impacts the country's productions recently, about 1 to 2 months previously. And for the drought, the Rosaria Grains Exchange have predicted the 40.5 million tons of soy harvest and also corn at 48 million tons. But they also warn that the seasons could still be a repeat of the dramatic loss in 2017 and 18 when the drought brought the soybean harvest down to 35 million tons. Because of these concerns, the Argentina have right now started to block agriculture trader from registering cargoes of the soybean meal and also soybean oil for export. Yeah, this is a move that usually we say is making before the hiking tax on shipments. These actions is actually twofold. Not only is there revenues for governments, but there are also an attempts to control the internal market price inflations for Argentina. Okay, so the import of soy meal are actually very critical to meet the EU proteins demands, right? With the South America country, they're actually shipping between 6 to 7.5 million metric tons annually out of 26 million tons, which is roughly about 28 to 29%. So with the restrictions causing the supply to be tight for the markets, yeah, I think the Argentina actions will also be a very important factors that affecting the soybean markets.
Okay, yeah, I think Argentina is also restriction is also quite strict, like as a lot of countries they also competitors oil. Okay, so for the fourth question is that do you think is there any relationship between the soybean price and the palm oil price?
This good question also sees that a lot of people is also wondering and curious about relationships. So actually the soybeans are used to produce becomes two different products which include soybean oil and soybean meal, which both of the soybean oil and meal have a different contract to trade inside the exchange, where the soybean oil and crude oil actually sharing the same edible oil markets. Hence, you will know that it will be a more related of soybean oil and crude palm oil compared to a original soybeans and crude palm oil. And for the oil edibles markets, they actually have another oils that we always have the caution of, and we always have the loops on is the Dalian palm oil for your extra informations. Because basically the normal logic come with they are actually replaceable as edible oil between each others. Hence, the changing price of the soybean oils to become cheaper will of course attract more buyers to purchase soybean oil if the crude palm oil do not reduce any of the price. So you could see the demands going to flow within the different oils, different edible oils in the markets. So they are actually having a direct relationship sometimes inside the markets, really encouraging all the investors like to study or follow with the palm oil news. If previously you didn't started to follow up with the crude palm oil news before this as you trade for soybean or soybean oil. Yeah.
Okay. Yeah, I think soybean price and palm oil price can say they are the same, but also can say that they are different. So yeah, depends on how you're monitoring the market. So yeah, so that's all for my 4 questions today for you, Hong Xing. Okay, so that's all for today. Thank you all for listening.
Thank you, Long Term.
Thank you everyone for tuning in. Thank you.